Hi everyone, and welcome to SIC Forex Trading. Feel free to like, comment, and subscribe for more content. Today we'll be discussing Forex Trading Robots or Expert Advisors. So, what is a Forex Trading Robot? A Forex trading robot is a conversational or informal term for an algorithmic trading system based on a set of rules that help determine whether to buy or sell an instrument, for an example, a Forex pair or CFD, at a given point in time. Algorithmic trading systems make use of complex formulas combined with mathematical models and human oversight. These algo trading systems use the process of executing orders by utilizing automated and pre-programmed trading instructions. What this means is a trading strategy that uses predetermined rules to decide whether to buy or sell an instrument using an automated trading instruction. Most of these robots are built with MetaTrader using the MQL scripting language, which lets traders generate trading signals or place orders and manage trades. Sounds good so far, right? All you have to do is run your computer software program and watch it place trades and count your money. So let's stop for a moment and understand there's no such thing as a holy grail for trading systems, manual or automated. Systems promising a high win percentage should be looked at with caution. If it sounds too good to be true, it probably is. There are a lot of scams going around, so always do your research. Next, we are going to look at some advantages and drawbacks of Forex trading robots. There is a long list of advantages to having a computer program monitor the markets for trading opportunities and execute the trades. Number one, improving order entry speed. Since computers respond immediately to changing market condition, trading robots are able to generate orders as soon as trade criteria are met. Getting in or out of a trade a few seconds earlier can make a big difference in your trade's outcome. Number two, diversifying trading. Forex trading robots permit the user to trade multiple accounts, currency pairs, or various strategies at one time. This has the potential to spread risk over various instruments and create a hedge against losing positions. The software is able to scan for trading opportunities across a range of markets, generate orders, and monitor trades. Number three, backtesting. Backtesting applies an automated trading system to historical market data to determine the viability of the idea. Traders can take these precise set of rules and test them on historical data before risking money in live trading. I recommend after backtesting, forward testing your robot on demo before risking money in a live trading account. Number four, minimizing emotions. Trading psychology is one of the most important aspects of Forex trading. Forex trading robots minimize emotions throughout the trading process. By keeping emotions in check, traders typically have an easier time sticking to the plan. Number five, preserving discipline. Because trade rules are established and trade execution is performed automatically, discipline is preserved even in volatile markets. Discipline is often lost due to emotional factors such as fear and greed. Forex trading robots help ensure discipline is maintained because the trading plan will be followed exactly. In addition, it also minimizes pilot error. For instance, if an order to buy one lot will not be incorrectly entered as an order for 10 lots. One of the biggest challenges in trading is to plan your trades and then trade the plan. Even if a trading plan has the potential to be profitable, traders who ignore the rules are altering any expectancy the system would have had. Forex trading robots can teach new traders to trade according to a specific set of rules. This allows them to achieve consistency by trading the plan. As we've already discussed, Forex trading robots boast many advantages, but there are some downfalls and realities you should be aware of. Number one, mechanical failures. Automated trading may seem simple. Set up the software, program the rules, and watch it trade. Depending on the trading platform, a trade order could reside on your computer, not a server. What that means is that if an internet connection is lost, an order might not be sent to the market. For this reason, most traders place their automated trading systems on virtual private servers to minimize potential mechanical failures. Number two, monitoring. Although it would be great to turn on the computer and leave for the day, automated trading does require monitoring. It is possible for the Forex trading robot to experience irregularities that could result in missing orders or duplicate ones. If the system is monitored, these events can be identified and resolved quickly. Number three, over optimization. Though not specific to Forex trading robots, traders who employ backtesting techniques can create a system that looks great on paper and performs terribly in a live market. Over-optimization refers to excessive curve fitting that produces unreliable systems in live trading. It is possible, for example, to tweak a strategy to achieve exceptional results on historical data on which it was tested, as such parameters can be adjusted to create a near perfect plan that is then completely fails as soon as it is applied to a live market. So when selecting your preferred system, always do your research. Number four, avoid the scams. While you search for your preferred Forex trading robot, remember, if it sounds too good to be true, it probably is. There are a lot of scams going around, and some Forex trading robots promise high profits all for a low price. So always use caution when selecting your expert advisor. I would recommend starting your search on the MQL5 website, as it is a great resource for these Forex trading robots. In summary, what is a Forex trading robot? A Forex trading robots are automated software programs that are used to generate trading signals in the markets. Forex robots are designed to remove the psychological elements from trading. While many Forex trading robots advertise the prospects of profits, it is important to remember they are computer software programs that are limited in their capabilities and not foolproof. You should expect a learning curve when using automated trading systems, and it is generally a good idea to start with a small trade size, penny lots, or even on a cent account while you refine your process. Thank you for watching my video, and feel free to like and comment with any questions you might have, and subscribe for more content. Until next time, bye.